Okay, so picture this. You're driving home from work on a Tuesday afternoon. Traffic is moving slowly. You are checking your blind spot. And then bam, you rear-end the car in front of you at maybe 15 miles per hour. Minor damage. Everyone seems fine. You exchange insurance info. Your $300,000 liability policy? You feel pretty good about that coverage. Fast forward 18 months. You are now being sued for $4.7 million. And your insurance company? They are only covering $300,000. You are personally on the hook for over $4 million. Your house, your retirement accounts, your kid's college fund. All of it is now at risk because of a fender bender in a Target parking lot. This is not some made-up scenario. This is happening right now to thousands of Americans who thought they had enough coverage. My name is Leo, and I spend way too much time thinking about liability insurance and asset protection. If you are someone who has worked hard to build wealth, but you are still driving around with the same insurance coverage you bought 10 years ago, when you had like $30,000 in assets, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because here is the thing. The rules of the game have changed dramatically in the last 5 years, and most people have no idea how exposed they actually are. Look, when most of us bought our car insurance, the agent probably said something like, hey, the minimum liability in your state is like $50,000. But I recommend you go with the $300,000 policy. Maybe even $500,000 if you want to be extra safe. And that sounded pretty reasonable, right? I mean, $300,000 is a lot of money. How bad could a car accident really be? Here's what most people do not realize. We are living through what insurance industry experts are calling social inflation. And it is absolutely destroying the traditional insurance model. Social inflation is this trend where jury verdicts and settlement amounts are increasing way faster than actual economic inflation. We are talking about cases that would have settled for $200,000 in 2015, now settling for $2 million in 2024. Same exact type of accident, same injuries, 10 times the payout. The Insurance Information Institute tracked this and found that the median verdict in personal injury cases has increased by 329% over the last decade. Let me say that again, 329%. Meanwhile, your coverage limits, those have probably stayed exactly the same. Now you might be thinking, okay, Leo, why is this happening? What changed? There are 3 major factors driving this explosion in lawsuit costs, and once you understand them, you will never look at your insurance coverage the same way again. First, we have got what the industry calls nuclear verdicts. These are jury awards that exceed $10 million. In 2010, there were about 10 of these per year in the United States. In 2023, there were over 100. That is a 10x increase in just 13 years. Second, litigation funding has absolutely exploded. There are now hedge funds and private equity firms that will finance lawsuits in exchange for a cut of the settlement. What this means is that plaintiffs can afford to hire the most expensive lawyers and drag cases out for years because they have got deep-pocketed investors backing them. They do not have to settle early for a reasonable amount because they are not the ones paying the legal bills. The litigation funding industry has grown from about $1 billion in 2010 to over $17 billion today. Think about what that means. There is $17 billion of capital actively looking for lawsuits to fund. And third, this is where it gets really interesting. There is a legal strategy called Reptile Theory that has become incredibly popular with plaintiff attorneys. The basic idea is that lawyers appeal to the jury's primitive survival instincts. They're not just arguing that you caused an accident. They are arguing that you are a danger to the entire community, that you could hurt anyone, that you could hurt them or their family next. Here is how it actually sounds in court. The lawyer will ask you questions like, do you agree that safety is important? Do you agree that when someone violates a safety rule, they are putting everyone at risk? Would you want someone like you on the road with your children? See what they are doing? They are turning a simple car accident into a referendum on whether you are a threat to society. And juries are responding by handing out massive verdicts to punish dangerous behavior and protect the community. Now, let me show you the actual math on why your $300,000 policy is not going to cut it anymore. Let us say you cause an accident. The other driver has some injuries. Nothing life-threatening, but they need surgery, physical therapy, maybe they miss 3 months of work. In 2015, this case probably settles for about $150,000. Your insurance covers it. Everyone moves on. But today, that same case could easily hit $1.5 million or more. And here is why. Medical bills have increased by an average of 47% since 2015. So what used to be $50,000 in medical costs is now $73,000. Lost wages? The other driver is probably making more money now than they would have been in 2015. And their lawyer is going to project those losses forward. If they claim they can no longer do their job the same way, you are looking at potentially millions in future lost earnings. Pain and suffering? This is where social inflation really kicks in. Juries are awarding way more for emotional distress, anxiety, loss of enjoyment of life. What used to get a 2x multiplier on medical bills is now getting a 10x or 15x multiplier. And then you have got punitive damages. If the jury decides you were reckless, if they decide you were texting or distracted or in any way negligent beyond just making a mistake, they can add punitive damages on top of everything else. These are specifically designed to punish you and deter others, and they can be multiples of the actual damages. So you take $73,000 in medical bills, add $200,000 in lost wages, multiply by 15 for pain and suffering, and you are already at over $4 million. Add punitive damages on top? You are looking at $5, $6, $7 million. Your $300,000 policy covers about 6% of that judgment. You are personally responsible for the rest. Now, here is what most people do not understand about how this actually plays out. When there is a judgment against you that exceeds your insurance coverage, the plaintiff's attorney does not just shrug and walk away. They come after your personal assets. And I mean everything. They will put a lien on your house. They will garnish your wages. They will go after your retirement accounts. Yes, even retirement accounts. While there are some federal protections for certain retirement accounts, many states allow creditors to access them. Your brokerage accounts? Your kids' 529 plans? All potentially on the table. I was reading about a case in Georgia where a guy with a net worth of about $800,000 caused an accident. He had a $300,000 policy. The judgment came back at $3.2 million. His insurance paid their $300,000 and then he was on the hook for $2.9 million. He ended up having to sell his house, liquidate his entire retirement account, and he is still making monthly payments on the remaining balance. All because of one accident. One moment of distraction. And the crazy part? He was only going 30 miles per hour when the accident happened. This was not some high-speed reckless driving situation. Okay, so what do you actually do about this? How do you protect yourself without spending a fortune on insurance? The answer is umbrella insurance. And look, I know insurance is boring. I know you probably already feel like you are paying too much for car insurance and home insurance and health insurance. But umbrella insurance is different because it is shockingly cheap for the amount of coverage you get. Here is the typical pricing. $1 million of umbrella coverage costs about $150 to $300 per year, depending on your location and risk factors. $2 million? Maybe $400 to $600 per year. $5 million of coverage? Usually under $1,000 per year. Think about that math. You are paying less than $3 per day to protect $5 million of assets. That is an absolute no-brainer if you have any meaningful net worth. Now you might be thinking, okay, Leo, but do I really need $5 million of coverage? Here's my rule of thumb. You want umbrella coverage equal to at least your total net worth plus your annual income times 10. So let us say you have $300,000 in home equity, $200,000 in retirement accounts, $100,000 in other investments. That is $600,000 in net worth. You make $100,000 per year. That is another $1 million of future earning potential. You should have at least $1.6 million in umbrella coverage. I would probably round up to $2 million just to have some cushion. But here is the thing nobody tells you. Umbrella insurance only kicks in after you have maxed out your underlying coverage. So if you have got a $300,000 auto liability policy, the umbrella does not start paying until that $300,000 is used up. This means you need to increase your base coverage limits before you can even buy an umbrella policy. Most insurance companies require you to have at least $250,000 or $500,000 in auto liability before they will sell you an umbrella. The good news? Increasing your base coverage from $100,000 to $500,000 usually only costs about $100 to $200 more per year. Alright, so here is exactly what you need to do this week. Not next month. Not when you remember. This week? Step 1. Call your insurance agent or log into your insurance portal and check your current auto liability limits and your homeowner's liability limits. Write those numbers down. Step 2. Calculate your total net worth. Add up your home equity, retirement accounts, investment accounts, savings, everything. Then add your annual income times 10. That is your target umbrella coverage amount. Step 3. Call your insurance company and ask for quotes on increasing your base auto liability to at least $500,000. Get quotes for $1 million if they offer it. Do the same for your homeowner's liability. Step 4. Get quotes for umbrella coverage at $1 million, $2 million, and $5 million levels. Compare the costs. You will probably be shocked at how cheap it is. Step 5. Actually buy the coverage. Do not just get the quotes and then forget about it. Actually pull the trigger. Now I know what some of you are thinking. Leo, is not this a little paranoid? I mean, I'm a safe driver. I have been driving for 20 years without a major accident. Why would I need $5 million of coverage? Look, I get it. Nobody thinks they are going to cause a major accident. But here is the reality. The National Highway Traffic Safety Administration says that the average driver will be in 3 to 4 accidents over their lifetime. You do not get to choose when those accidents happen or how severe they are. You do not get to choose whether the person you hit has a great lawyer or whether you end up with a jury that wants to send a message. And it is not just car accidents. What if someone slips and falls on your property? What if your dog bites someone? What if your kid accidentally hurts another kid and the parents sue? Umbrella insurance covers all of that. Plus, here is something most people do not think about. The more assets you have, the bigger target you become. Plaintiff attorneys specifically look for defendants with high net worth because that is where the money is. If they see you own a nice house and have a good job, they know you are worth pursuing. And honestly, if you are watching this video, you are probably someone who is building wealth. You are probably doing better financially than the average person, which means you have more to lose. It is kind of insane to spend years building up $600,000 or $1 million in net worth and then not spend $1,000 per year to protect it. It is like working out 5 days a week to build muscle, but refusing to eat enough protein. You are doing all this work to build wealth and then leaving it completely exposed to a lawsuit that could wipe it out overnight. Here's the hard truth. Most people will not take action after watching this video. They will nod along, think, yeah, that makes sense, I should probably look into that, and then they will close the video and go back to scrolling, and they will never actually do anything about it. And then one day, maybe 5 years from now, maybe 10 years from now, they will cause an accident. And they will remember this video. And they will wish more than anything that they had spent 30 minutes making a phone call and $1,000 per year on umbrella coverage. You have got two choices here. Choice 1. You spend maybe $500 to $1,000 per year on proper liability coverage. You sleep better at night knowing that if something happens, your family is protected. Your house is protected. Your retirement is protected. Choice 2. You save that $1,000 per year, and you hope nothing bad ever happens. And if it does, you lose everything you have spent decades building. Your kids' college fund, your retirement, your home, all gone because you did not want to spend $3 per day on insurance. I increased my umbrella coverage to $5 million about 3 years ago. It cost me about $900 per year. That is $75 per month, less than I spend on my gym membership. And the peace of mind is incredible. I drive my kids around knowing that if something happens, if I make a mistake, if I get distracted for 1 second and cause an accident, we are not going to lose our home. My kids are still going to be able to go to college. My wife and I are still going to be able to retire. That is worth way more to me than $900 per year. Alright, if you found this helpful, make sure you subscribe to the channel and hit the notification bell because I make videos like this every single week breaking down the financial decisions that actually matter. The stuff that can save you hundreds of thousands of dollars over your lifetime. Drop a comment below and let me know what your current liability coverage is. Are you at $300,000? $500,000? Do you have an umbrella policy? I am curious to see where everyone is at. And seriously, do not wait on this. I am not trying to be dramatic, but this is literally one of those things where taking action this week could save your entire financial future. You have worked too hard to let one accident destroy everything. Call your insurance agent tomorrow. Get the quotes. Look at the numbers. And then actually buy the coverage. Your future self will thank you. Alright, that is it for this video. I will see you in the next one.